back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I am Yatin Mota.
Well, Yatin, the markets completely fizzled out from the day's high. In the during the midday chat, we were talking about how it's turning out to be a tremendous Tuesday or a terrific Tuesday for the markets. But we have completely fizzled out, given the fact that we saw a bout of selling come in post 3 p.m. And we have ended the day at day's low, and the Nifty just about managed to end in the green. Sensex rather has managed to end with mild losses or thereabouts, but it's the mid-cap index that has held out and ended the day with the gains of somewhere around 0.6% or thereabouts. If you look at individual movers, Realty Pack and the IT Pack came under selling pressure. They ended the day in the red. Aside of that, metals continues to shine bright. Pharma is the other pack that managed to end the day with gains. If you look at some of the gainers, Divi's Lab once again managed to extend its gains for a second straight day. Bajaj Finserv, Eicher Motors, UPL and BPCL after a strong show in the fourth quarter was among the gainers. On the losing front, Titan, HCL Tech, Grasim. So as I mentioned, IT Pack wasn't doing too well by the end of the day. So some of the IT companies have come under pressure. Yatin, anything from the mid-cap end?
So if you look at the markets, Nandita, the last half an hour was quite, volatile and rather, there was a large amount of profit taking which happened in mid-cap. So, mid-caps were clearly off days high. A lot of these earnings reaction which are doing well also saw some profit taking intraday. And in general, if you look at the mid-cap end of the market, we had the Adani Group stocks which are doing well. But yes, they came off from the day's high. From the gainers, we had TV18 Broadcast, that stock moved up 8%. Delta Corporation, that stock is up 6%. Varroc Engineering, they reported a very strong set of earnings this time. Margin expansion was seen, and post the earnings, Varroc was also up nearly 6%. What was not doing well in trade was NCC. In the morning also, stock opened with pressure on the concerns that if the new Congress government in Karnataka stop work of a lot of infrastructure projects in Karnataka, which the news reports are suggesting, then there could be some receivable risk which could be emerging from that particular region. So NCC, that stock is down 8.5%. HEG, Phenolics Pipes being the other losers as far as Nifty 500 is concerned.
Right. On that note, let's take a look at the stocks that are on our radar this afternoon. Starting with BEL, Yatin, stock was under pressure today, 2.5% down, but don't forget that defense stocks have run up quite a bit over the last 1 year. So this particular stock was up somewhere around 40% or thereabouts in the last 1 year. But looking at the stock performance, in fact, the Q4 performance, strong execution, margins, in excess of 28%. They have met the guidance when it comes to order book as well as revenue and margins. And guidance has also been pretty strong, given the fact that the company has said that order booking for FY24 will be in excess of 20,000 crore rupees, which is a big positive. And it also expects revenue growth of somewhere around 17% in FY24 and margin guidance of 21 to 23%, which is not very bad. Given the fact that, there's a lot of focus on defense and Atmanirbharta from the government. So, a lot of analysts are anyway very positive on defense stocks, right? So, this stock is poised to do well, and given the fact that return ratios have also been in excess of 20% over the last 5 to 10 years, and even in the last financial year, the return ratios were in excess of 20%. And at a PE of 22.6, it is actually cheaper compared to its other peers like Bharat Dynamics, BEML and the likes. So, all in all, I think the government's focus on defense and self-reliance also bodes pretty well for the stock. Strong performance coming in. We'll have to see how things go from here.
So that's about BL. But another one pack which was moving in trade was the oil marketing pack. Suddenly, the markets have started realizing that the fourth quarter exit earnings were quite good, and not only that, now which with the fact of which the market has got appraised is the low crude prices, because of which petrol profitability and diesel under recovery have turned around significantly. In fact, if the crude is at current level, first quarter earnings also could be bumper according to analysts, and probably that is the reason why we had the likes of HPCL, BPCL, IOC, all of them moving in trade. In fact, Morgan Stanley was, the one which was bullish on BPCL post the earnings. They have an overweight rating with a target of 390 rupees per share. And if you look at BPCL, the core refining margins touched nearly $20 per barrel. The guidance for margins was strong according to Morgan Stanley, and also the oil product demand, be it petrol, diesel, lubricants or, other allied products, they have also picked up because of which there is some traction in the oil marketing pack, especially the PSU names like BPCL and IOC.
Right, Yatin, but interesting to note that both foreign investors and DIIs have been sellers in the counter in the last quarter. So we'll have to see whether the tide, turns, given the fact that crude prices have cooled off quite a bit from $90 odd or thereabouts. The second stock on my list today is Delivery. Macquarie has come out with an outperform rating on the stock with the target price of 440 rupees or thereabouts. Yesterday, the number, in fact, on Friday or Saturday, I think the company reported numbers, right? On a YY basis, losses had widened, but on a quarter-on-quarter basis, the performance was extremely good. They had narrowed their losses on a quarter-on-quarter basis. Even ICICI Securities says that the company had even turned EBITDA positive for the first time since its listing. So that way, and of course, we will be watching out for how soon these companies turn to profitability. That is one key monitorable when it comes to some of these new age tech companies. Morgan Stanley remains overweight on the counter. Kotak Institutional Equities has a buy rating. And interesting to note that domestic mutual funds have been buyers into these stocks, even though FIIs have started selling. So all in all, we'll have to see how the volumes pick up, because volumes on a quarter-on-quarter had picked up. But going forward, how soon they get back to profitability is something that will determine, whether or not it's time to buy into the counter. Aside of that, I think caution is the word when it comes to, some of these new age tech companies.
And that is exactly what is happening to Zomato. You spoke about Delivery, but Zomato also, we have seen Macquarie downgrade the stock today with a target of 55 rupees. Now, the reason why Macquarie has downgraded Zomato is the kind of revenue miss which we have seen in the fourth quarter earnings. If you look at the improving unit economics, there has been deterioration in the growth momentum. Because typically when you reduce discount, probably consumers move to other platforms or probably look at better alternatives, which is a fine dine option or probably ordering from the local restaurant. So I think the fall in discount probably would have aided the margins for Zomato, but I think the growth becomes a challenge then, according to Macquarie. If you look at the FY 24-25 guidance by the company in terms of profitability, that has been good. In fact, most of the brokerages have narrowed their loss expectations for the coming financial years. But yes, if you look at the sequential growth in food delivery, that has disappointed the analyst community, and probably that is the reason why Macquarie has downgraded the stock of Zomato. As I said, the target is 55, much lower than the current market price. And I don't know how, but Macquarie usually gets it right when it comes to these new age companies, be it Nykaa, be it Paytm.
Paytm as well, and right? Double upgraded Paytm sometime in Feb.
And now it's Zomato.
But Zomato, I mean, whoever I have spoken to are very, very cautious when it comes to Zomato, given the competition that ONDC poses. Even though ONDC is quite new, you really don't know how the user experience turns out on that platform. In fact, it's not a platform, it's an open network sourcing, open-end network sourcing. But still, it doesn't really pose a near-term threat, but how it plays out on the user experience front is something that will determine whether it will be a big threat for Zomato or not. Well, on that note, I think it's time to say goodbye. We have covered 4 stocks that were on our radar this afternoon, but of course, we'll be back with the markets at 8:30 a.m. tomorrow, so don't forget to tune in. But for now, it's a goodbye from me and Yatin. Thanks a lot for watching.